Great to be here with you again. I want to thank my team, as always, for helping me to prepare to speak to you today. The president, as you just heard, gave a legacy speech today wherein he spoke about the strong economy that his administration is leaving to the incoming team and how we got here given what we faced when we took office. He then lays out he laid out a set of benchmarks, which I will go through with you in a minute, against which the incoming administration's economic stewardship should be judged. The speech makes clear that while the pandemic was the acute source of economic stress 4 years ago, the damage done by decades of Republican fealty to trickle-down economic policy was a long-term underlying source of economic pain for millions of Americans. The speech goes through the policy implications of that agenda, offshoring jobs with no concern for workers in their communities, anti-unionism, and disinvesting in American infrastructure, workers, industries, and contrasts that with the Biden-Harris agenda of middle-out, bottom-up growth, which implies a very different agenda, investing in workers in key industries of future growth and productivity, union power, full employment labor markets, fair taxation, and taking on corporations and lobbies like Big Pharma on behalf of the American middle class. The timing is not accidental. As Corrine said, a quote from the speech, "With the outcome of this election, we face an inflection point. Do we continue to grow from middle out and bottom up by investing in all of America and in all of Americans, supporting unions and working families, or do we backslide to an economic theory that benefited those at the top while working people in the middle class struggled for a fair share of the growth?" The president, as his speech, at the end of his speech, the president ticked through a set of benchmarks, indicators by which the conditions of the current economy that the incoming team has inherited can be assessed and judged. 16 million jobs with a manufacturing and a construction boom. In 4 years, we'll know if that job growth and booms will continue or not. Historic lows in unemployment, record new businesses, significantly closing the racial wealth gap, more people covered by health insurance than any time in history. Our tax code is fairer. We've gone after concentrated corporate power, and in 4 years, we'll know if this power goes back to big corporations or not. Let me end my introductory comments today with a little bit of a reflection on the economics, speaking as the chair of the CEA, of the economic theory behind what the president talked about in his speech today. I should say the economic theory and the economic outcomes is as far from just a theoretical or an academic exercise. The president talked about achieving a soft landing, and this is the idea of considerably lower inflation without giving up much on the economy's demand side. That is, lower inflation without higher employment. As you know, many economists told us we couldn't get there. We'd have to have a recession to have as much disinflation as we've seen. In fact, that did not occur. And one of the reasons it didn't is because the job market, I heard the president mention full employment a couple of times in his speech today. The job market has stayed uniquely strong for uniquely long. And that's given workers bargaining clout along with his union agenda. And so as prices have come down, as inflation has come down, and wages have gone up, we've had real wage gains now for about a year and a half on a yearly basis. Last seen 1.5% real year over year. That's real. That's a considerable pace of real wage gains. This helps support strong consumer spending, and that's been a core factor keeping this economy moving forward above trend growth rates, and leading to a situation that you heard the president talk about today where the U.S. economy really is the envy of the world. And I say that as someone who recently came back from Europe, where I was frequently accosted by people who wanted to just talk about how we've achieved the innovation, the productivity, the persistent full employment that we have. That's the consumer side of the story, the consumer spending side of the story. It's 70% of our nominal GDP, so it's extremely important to keep the economy moving forward. But I often think of consumption as today's story and investment as tomorrow's story. I think what the president talked about today, that was so important and so compelling, especially given the fact that many of these benefits are going to unfold 2, 4, 5, 10 years from now, if the incoming folks nurture the seeds we've planted versus take them out. This investment agenda has the potential and is already transforming economic growth, production, innovation, building up new domestic sectors in this economy in the area of clean energy, battery production, chips, and that kind of investment agenda, that speaks to future growth rates. That speaks to future opportunities. That speaks to future productivity growth. Now, we've already, as the president said in his speech today, there's been $1 trillion of private investment that has flooded into those sectors, into clean energy, into semiconductors, into providing infrastructure for this country. All of that, again, is a complement to the consumer spending side of the agenda, the soft landing agenda that sets us up for a future based on the kinds of investments the president talked about today.